All right, good to go.
Cool. All right. Hey guys, today is what is today? April 11th. The
2017 or
2017. The price of Bitcoin is $1,200 and we are oh wait, no, that was 16. Anyway, okay, let's go ahead and get rolling. So, Rock, I'll tell you what, man, I'll do my analysis, just kind of an update based on this breakout, and then I'll pass it to you, and you can talk about anything you've been looking at.
all right, sounds good.
Cool. So hopefully you guys have seen some of the trade alert updates I've been posting over the past few days. You know, when the markets are more active, I'm more active. Very simple. You know, when the markets are slow and kind of consolidating inside of a range, I'm more slow and less active, right? That it's just a very simple kind of philosophy of press the gas when there's volatility and press the brakes when there's not. And so, you know, just kind of recapping, I guess, the past several months and to bring context to where we are right now. So going back to 2017-18, right? 17, we had the biggest bull market ever. Price went parabolic in phase 3 of the market cycle, topped out with the launch of futures, CME futures. And then we basically had an extended bear market where we had about 6 months or so of support around 6K, which we dubbed the line of hope, right? Because a lot of people that bought above 6K during the parabolic phase 3, which is where you should not be accumulating, right? A lot of these people turned into bag holders around this point, right? And then this was the line of hope. And when the line of hope breaks, then the market goes into what? Despair, right? So then we had kind of the extended sell-off where we went from 6 to 3K. And then that led into 2019 where we bottomed out kind of end of December. So it's kind of interesting, you know, what day was this? I think it was, like December 17th or 18th was the top. And then December 15th or 16th was the low. So it was literally like one full year from that to that.
That's art right there, Chris.
Yeah. So, yeah, it doesn't get much more precise than that. And then, so what happened since then, going into the new year, it was kind of unclear what was going to happen through here, but I started accumulating. If you go back and look at some of the market updates and the alerts and the watch lists, I started accumulating in the low 4K range, like I think 4,200, and then was very just kind of watching this price action. And then as we started to squeeze here in late March, I sent out some watch lists and we were talking about what happens when price starts to squeeze. You know, the market moves like a heartbeat, right? It has moments of contraction and expansion. And the longer the period of contraction or consolidation, usually the bigger the move, the bigger the push when you do break outside of that range, the bigger the expansion, right? And that can happen on both sides of the market. So, you know, some examples that we've referenced are like the breakouts in 2016, where you'd get a breakout, 6 months of consolidation, another big breakout, more consolidation, and then those consolidation periods got smaller and smaller as the bull market matured, where eventually it was like there was no contraction at all. It was just expansion and people emotionally throwing their money at Bitcoin. And then that worked on the same way on the downside too, where we had more contraction through here. Things got tighter and tighter and tighter. And once they got to a fever pitch of consolidation, that's when we got expansion to the downside, right? And so through here, we've had call it December, January, February, March. So about 4 months or so of consolidation through here. And then we got the squeeze and we got the break of resistance, and that led to, let's see what that percentage move was. So far, it was about a 30% move, right? So not a massive move. And the reason why, at least so far, is because we have major overhead resistance. 6,000 is a massive line in the sand where, again, think of the price action not as some like magical thing, but this is the visual representation of what people did. It's very simple. This is just all the buying and selling that people did and the price movement that happened because of that. And so all of these people, actual real people placing buys, whenever they see price action get into a major resistance area, the herd mentality there is, okay, well, I'm back to where I was hoping we were going to bounce from. We're back there. I might as well take profit, right? Or just cut my loss off, right? That's what happens when you have this big shift from bull to bear market. And that's why you see lower highs, right? This is the same thing that's happened since 2013. Anytime we go into a bear market, what was prior support turns into resistance, and that stays in place. And that is a technical definition of a bear market, not moving averages. Moving averages can be deceiving. It's what is the market structure? Are you making lower highs and lower lows? Or are you making higher highs and higher lows? That's the purest definition of bull and bear market. And right now, we have a breakout, but on a much longer term basis, we are technically still in a bear market, right? And that's why in all my alerts and all the stuff we've been talking about, I've said, like, guys, just be very, very careful with bull market type setups, meaning breakouts, dip buys, all that stuff in a bear market, because typically any kind of bullish price action gets sold into because of the reasons I just mentioned, right? So before we dive into like the more immediate picture, are you guys all clear on kind of the broader context of the market? A, what's happened over the past year, B, how people respond to certain price movements, and C, kind of what's happened over the last quarter. Everybody clear? Any questions, comments, confusion? Cool. Okay, so let's jump into a little bit of a more immediate picture. All right, so we know what led up to the breakout. And again, it was a super, super fast breakout. Didn't give us a lot of time. I happened to be sleeping when the breakout occurred. That is one of the downsides to a 24/7 market is we are human, right? And therefore we need sleep, unless your name is Rocky and you're trading a bull market where therefore you don't need sleep and you just take every single trade that occurs.
Just stack cases of Red Bull. That's all. Just Red Bull and ammo.
Yeah, you put your sleep aside until bear markets.
That's right. I'm still technically in hibernation.
Yeah. So anyway, so the fills that I got here were just on a partial size of what my intended fills were. And that happens when you get really fast breakouts and you only have limit orders waiting. Is depending on what type of order you set, you may or may not get filled. And if you do get filled, you may or may not get filled the entire position that you wanted. In my case, it was only about a quarter of what I really wanted. So with that said, leading up, we knew that the 5K to, the low $5,000 range was the first kind of profit target. I closed part of that position. And what I'm looking at now, what we've been talking about for the past week is, okay, where is this going to go now? Okay, how much follow through are we going to get? And yesterday, I'll just pull this chart up. Yesterday, I posted this kind of example showing how usually, meaning the probabilities say, probabilistically, whenever we get a breakout or some kind of green push, meaning a move to the upside, you usually get follow through above that. So what happens is you get like 1 or 2 big green days, then a handful of consolidation days, and then a secondary push, right? Meaning another breakout. And sometimes it's like this on the right-hand side where you get the first pop. And you can see it was like 2 days of like really upside movement. And then 1, 2, 3, 4, 5 days of consolidation, 2 more days of upside. So you got really 1 more green leg, right? Because the market moves in terms of runs, retracements, and then it lost steam here, right? Where back here, you got actually 3 more green pushes. So you had a push, about a week of consolidation, a push, a couple days of consolidation, a push, a capitulation candle, a lot of choppiness, consolidation, 1 more green push, and then finally it turned over. So very rarely, if ever, will the price action look the exact same as something in history. It's really the forest through the trees that you're looking for, right? It's the overall movement and the expectation. So what I've been trying to figure out, and it's really difficult to predict this, the only thing you can really do is respond to the price action, is trying to figure out, okay, are we going to get a second and or third, fourth, fifth push, or is this kind of a V-top like one and done, right? That's really where my focus has been. And so if we go down to an hourly chart, we can talk about what's transpired over the past like 48 hours or so. So had the push, had consolidation, more consolidation. And then yesterday we actually got what I call a FOBO, or a fake out breakout. Let me clean some of this up so we can see. So you can see through here resistance, right? Like if we look at this as if it's the live market, and as we were talking about in chat and in the watch lists and everything, we were saying like, okay, through here we have an ascending trend line. We have a squeeze into, call it 5,200 or 5,300. Nice resistance area. If that breaks, that's a breakout. But one thing that we know is there's always the possibility of a FOBO, right? So FOBO equals a fake out breakout. And what does that mean, or what does that look like? Well, you'll get a breakout. So, and again, breakouts are strongest whenever you see them on the daily chart. This is just based off of the 60-minute, so it's a much smaller breakout. You know, whenever you have like a multi-month breakout or breakdown, those are typically more reliable and the moves are much bigger. So this is more of like, you know, just an intra-week breakout, I would say. So the probabilities of a FOBO are higher. But anyway, what happened is, so you get the breakout, and then what that can do is it can trap. It'll say, you know, okay, anybody that bought this breakout, and then you get this immediate pullback. So it kind of, it head fakes people out. So this is where you'll get people that'll like buy the high and then sell the low. So they'll get an alert, or they'll see it and they'll buy, and they'll usually get filled like really close to the top if they're using market orders. And then they'll be so obsessed with the intraday price action, they'll watch it and they'll see it pull back and they'll go, oh shit, this isn't working. And then they'll close. So they literally buy the high and sell the low, right? That's the danger. And this is why I've been putting out all these like warning signs saying, guys, be very, very careful and be very, very skeptical of any upside movement into the 5 to 6K region, because of the fact that we are in a bear market technically still, and 6K is a really big, scary area, and we don't know where the exact top's going to be, right? That's why like some people were asking over the past week or so, like, well, Chris, what do you think of like buying through here? And my response is, my personal opinion, you know, I'm not telling you what to do, but my personal opinion is that it's risky to have an average order fill somewhere up here, because your risk to reward is really 1-to-1, right? Like if we, you know, let's just say you're going to buy somewhere here in the middle, and your risk is, you know, below the breakout zone, and your reward is 6K, you know, you can see you're risking about, call it 15 or 20% to make 15 or 20%. So it's literally a 1-to-1 risk to reward into a really strong area. Whereas if you have an average fill closer to the breakout level, and you might not get an exact fill at the breakout level, but if you get a fill somewhere down here, then your risk to reward is, risking 5 or 10% to make 30 to 35%, right? That's why, like, I always think about on breakouts, what is the risk to reward? And the risk to reward that you actually get, that you actually realize on a trade, is very rarely what you plan the breakout to be. You set your profit targets and you come up with these ideas, and then you use price action as a guide. And sometimes the breakouts go much further than you expect. And sometimes you're able to take a little bit of profit at your first profit target, and then they roll over and they fail. And you go, okay, well, the market just didn't get any follow through for whatever reason, right? So that's kind of my thought process on this breakout is, as of right now, let me pull up the chart that I posted today. So as of right now, the price structure is technically still to the upside. And right now you can see we've got a trend line of support. We're at the 38% retracement, right? Which is the first level inside of our sweet spot. So kind of this white circle and these 3 white levels, this is our sweet spot retracement zone. So it's in between the 61%, the 50%, and the 38% retracement. If it exceeds that, if price breaks down below 4,700, you can see that's going to be below all of this price action, all of this market structure. And it's basically open air from 4,700 down to like 4,200. So to me, what I'm looking at is, I have my mental stops below this breakout level for now. But if price starts to break below 4,700, at a minimum, I'm going to look to take a graceful exit. I'll probably just cut off the trade at whatever price it is and just understand that market structure has changed. We're in a bear market. We didn't get as much follow through as I thought we could get. And therefore, I took a little bit of profit back here. And then I basically broke even on the other portion of that trade, right? That's how I like to manage breakouts. That's the bear case for this. The bull case for this is if buyers are able to hold either the 5K level, which is a round emotional price level, or worst case, the 61% retracement, say we get a deeper pullback and we bounce off of that. My next expected zone is the 100% extension, which also brings us, so happens to coincide and line up with the next round emotional price level of 6K, which is also multi-month prior support turned into resistance, right? So let's see what that looks like from here as far as more potential upside. That's about, it's about another 15 to 20% upside from here. So that's kind of what I'm looking for. And if we get into this level, I'm going to close a majority of that position and then leave a runner in case the market does something crazy and it just breaks through 6K without any kind of resistance, which I think the probabilities of that are super low just because that resistance level was so strong. But again, that's why I leave a runner just in case. And that way I don't have to guess. I don't have to quote unquote predict. I just get to respond.
The technical term for that runner is called a moon bag. Always leave a little moon bag.
A little moon bag. That's right. That way you don't have to sit on the sidelines pouting.
Yeah.
You go, man, the market did something unexpected, and I'm here for the ride.
We do know that Bitcoin loves its surprises, but
yeah.
I'm just for myself. I pretty much agree with everything you said. I'm kind of what my expectation is if we do hit 6K to see a lot of resistance, have a dip, and then probably create more sideways consolidation. I wouldn't be surprised to see some some nice shakeouts in that process, and maybe a
Yeah.
little bit more sideways chop. Who knows? Maybe even like a retest of the lows if we have like some kind of black swan or some kind of shakeout similar to 2015.
Yep.
So I think right now it's kind of like just in price discovery, establishing a new sideways range. It's kind of what I'm anticipating, or that's where my mindset's at. So I'm just kind of really being patient and mostly just have some spot stuff. But yeah, I if it broke above 6K and just continue chugging with like higher lows and highs, then obviously that would be fairly bullish and would probably throw a lot of people by surprise. But
Yeah.
I'm not necessarily anticipating that.
Yeah, we'll see. And as I'm sure a lot of you guys have seen on social media or CNBC or, some of these crypto news sites or just other people kind of coming up with their quote unquote predictions or opinions about what could happen. There's some people that are using like, if we use like the log chart, are coming up with reasons to expect another bull cycle like really quick. There's the bear case of that is, we get a push down into the 1 to 2K range again. My attitude with kind of the longer term price movements is I don't try to predict what's going to happen. That's because what are predictions? Predictions are just opinions, and you can come up with predictions based on mental models, right? Like we could say, okay, there's X number of millionaires in the world, and there's only ever going to be 21 million Bitcoin. So therefore, not every millionaire can own one Bitcoin, right? If all things are equal, therefore the price should be X. Or the total, money supply in the world is X trillion. And if Bitcoin takes 1 or X% of that, therefore we can value coins at this number, right? And there are several people that are in the crypto community that come up with those type of predictions. But I'll tell you, 99% of those predictions aren't ever going to come true, right? The markets never do what most mental models say, right? It's always unexpected, right? So therefore, as traders and investors, I think it serves us better to not try to think like a TV pundit talking head or an economist. Let's act as if, which we do, have real skin in the game, right? For those of us that are investing and trading with real capital, what we do with our capital is way more important and real than what any person on the news or any like guru says as some kind of possible model, right? So if you look at yourself as a professional, right, and you say like, hey, I want to take this seriously. I want to be a professional investor. I want to be a professional trader as opposed to an amateur, which most amateurs lose. Then I think the better mental model for that is to think like we've been talking about. Think in terms of possibilities, probabilities, and plans, right? Look at everything that the market could do. Kind of think about the probabilities and see if something is very clear from a statistical edge, which most of the time there isn't, but whenever you find one, you can exploit it, and then create a plan around any of those favorable scenarios and ignore everything else. If I were to sum up like the most important lesson that I've learned in the markets over like the past 15 or 20 years, it's that. It's stop trying to predict and force your opinion on the market and start thinking like a professional. And like, if that's the one thing that I could help you guys do, I think it's going to save you a lot of money, time, and frustration, and at least get you on the right side of the bigger trends. And then from there, TA and, little skills like using the order book and understanding Fibonacci tools and risk to reward, like those are all very valuable things. But if you get that first part wrong, If you get the mental model side of it wrong, everything else collapses. So that's why we spend so much time talking about this stuff and looking at the bigger picture, is because that's where it begins. And yeah, exactly. Yeah. So yeah, I know that was a little bit of a tangent, but I feel like it's so important that I like to bring it up all the time.
Absolutely. I kind of view it similar to the seasons. I look at the charts, and it's like when you have the seasons, you know that spring is coming at some point. Now, this isn't true for all assets or all investments. Obviously, there are some investments out there that are not cyclical, that don't have market cycles. There are literally stocks that will hit a bear trend, and then that's it. That's sometimes they go bankrupt, and then that's the death of it, right? Bitcoin seems to be, at least at this junction in time, seems to be unique in the sense that it has multiple market cycles. So just looking at Bitcoin and crypto market cycles in general, there are certain types of behavioral patterns in the markets and charts that we look for to tell us as to whether or not, we're getting closer to winter or getting closer to spring and summer. So you might know when spring is. Like technically in Canada right now, spring was March 21st, but there's still a crap ton of snow, right? So I don't know the exact date of what spring's going to be or how that's going to look, but eventually you kind of roll into it, and it has a certain type of behavior. Today's a very warm day. A lot of things are melting. So that's kind of like would be similar to market behavior. Or when the market was parabolic and you saw everything going up straight vertical, and the mania and the insanity that we had around it, the fervor, you see all the signs of winter, that you're kind of getting into fall. You don't exactly know where the exact top's going to be, but you recognize the signs, right? You kind of see the signs and prepare for the winter, last call type of thing. And so what the market's producing now, to me, it shows that there is a possibility it could be showing, early signs of spring, and there's a certain type of behavior cyclically that it does. And typically in crypto, the type of behavior that we see after a long bear trend is a long period of flat consolidation at a support zone. And then when we start to go into the summer seasons where the leaves actually start to bud and grow on the trees, then suddenly we start to produce higher lows and higher highs. And it just lasts consistently. And there might be long periods of consolidation and such before each break. But that's generally, how Bitcoin has behaving cyclically over the past 10 years. Now, I believe that there will come a point where we'll hit market saturation because, I don't think all things don't necessarily last forever per se, unless, of course, you were to compare it to, let's say, the greater stock market. And then you would probably see multiple market cycles in the greater stock market over the past 100 years. So that would be one example, like the US stock market. But there are some global stock markets that haven't been very cyclical like that. There are some that have actually been losing year over year on average. So it really depends on the market. But so far with the data that we have on Bitcoin, based on supply and demand and based on previous market cycles and so on and so forth, industry growth, technology adoption, it appears we're still kind of in a cyclical trend. But of course, nothing is ever guaranteed. So that's the caveat. We're always on the bleeding edge. There's never any guarantees, right? Even when we were bullish in 2015 and 16, and even when we were breaking out 2017, there was never any guarantees. One always has to still take a moment of pause and try to step back to ensure that one isn't consumed by confirmation bias. But if I look at the whole meta trend or the meta game in general, whether or not we know the exact day of the reversals and so on and so forth, that's not really the important part. The important part is getting the general overall 360 bird's eye view and getting that process right, understanding when you're getting into the parabolic phase of the cycle, leading into the bear trend, battening down the hatches, and then understanding when you see the possibility of springtime to plant some seeds. No guarantees that it's spring, but if one works with the premise of buying low and selling high, then obviously, buying when the market drops 84 plus percent or 90% or higher in some cases with crypto, one's probably getting much better odds than obviously buying anything up.
Rock,
up
you
to
mean we
10K.
shouldn't just buy whenever CNBC is telling us?
Yeah, they ruined it the other day. I think yesterday or whatever, they said, oh, we're going to go higher. And sure enough, it dumped.
Yeah, they're a good counter indicator.
Yeah.
So there were quite a few questions about like position sizing, like what percent runner do you leave and what percent do you close at your first profit target and so on. I'll tell you guys what I generally do. Now, it's usually slightly different on every trade. It really depends on what the whole scenario looks like, but I'll give you like what my general trading plan looks like is like, and this is in a bear market, by the way. So like breakouts in a bear market. And we talked about this, I believe, last week, but I'll just tell you, like I generally close anywhere from 25 to 50% at the first target. And then another, like usually like 25% at second target. And then I like to generally leave about a quarter for a runner. Right now, depending on the trade, sometimes it'll be like, okay, I'm going to scale out initially like 5 or 10%, and then wait a couple hours and watch the price action, and then that can kind of grow to about a quarter. Or sometimes there have been instances where I've gotten into a trade and I see something, or like some kind of news comes out, or like especially on shorts. So this is usually like breakouts, but like for a short, it's usually a lot more aggressive. It's 50% plus at the first target, and then 50% or more on the second, and then like rarely a runner. Like on shorts, I'm a lot more risk adverse and a lot more quicker to get out. Because I don't like being exposed in a short position for weeks on end. Like my goal with shorts is to try to catch the 1 to 3 day panics, right? And like I caught a lot more back in 2014, didn't catch a whole lot of shorts in 2018. But that's just kind of my philosophy on that.
Yeah, the upside risk is a lot higher. It's like infinite upside risk. And, Bitcoin has been known for its ferocious bounce plays. So usually in those, if you're in a winning short position, it's definitely good to lock gains along, a lot quicker. I kind of agree with that sentiment.
Yeah.
Definitely.
Awesome. Here, let's take a look at couple of other markets. Let me pull up Kraken, since I believe, let's just make sure this is still the leader. Yeah. So Kraken, where's Bitfinex? So they're only 100K. Yeah, it's not trading a lot of volume today. So this is kind of the challenge with early coins like Kraken, like Tezos. I mean, somebody give me a red
Kraken coin.
Well, they did raise what? How much were they raising? 100 million at a $1 billion valuation? I can't remember. Anyway, so taking a look at earlier coins like Tezos, the challenge when you have an early coin is a lack of liquidity, right? A lack of trading volume. That's always the case, or I should say most always the case in the early days of a crypto. The same thing was true with like Ripple and Ethereum and Dash and Strat and like all those old ones from a couple of years ago. And so if we look though more immediately, and just to get you guys caught up for anybody that doesn't know what this is, Tezos did a ICO at, what was it, 30 or 40 cents, Rock?
Yeah, it was 40 cents on the opening, and then 50 cents.
Okay, cool. And then listed on Kraken back here in October. Obviously, this was like coming off of the highs, and got the typical ICO listing, red bar of death, sold off back to ICO prices. And then we recently got a breakout of the accumulation range, and we've had an extension, right? So this is a much different risk management strategy. We went into a lot of depth. I feel like last week's class was really good. If you guys haven't seen that, go back and watch that. I'm not going to go in as much detail as we did last week, just because I feel like we covered that, and I don't want to repeat everything I said last week. But if we just drill down to an hourly chart, the thing that I do want to talk about and show you guys is the market structure here. So, what I was saying with like smaller liquidity, what that means for shorter time frames is just not the prettiest price action, right? So like what I like to do on really thin markets like this, where like, again, I don't know or trust BitMax volume, Gate, the ones that I feel like are more reliable are like Kraken and Bitfinex, the ones that we know, the ones that we've traded, the ones that have something to lose if they lie about their volume, right? So really today, I'd say maybe it's trading 1 million in volume. These websites have become so unreliable for looking at volume that it's become pretty frustrating, but you just got to kind of round off to the nearest million. That's the best way I've found to think about it. So, a market that's only trading like 1 million or 2 a day or less on an exchange, the intraday price action just begins to look really kind of choppy, right? So what I do is I try to, again, see the forest through the trees and think in terms of market structure, meaning like runs and retracements, right? So I'm just going to kind of use, there we go. So here's what happened. We had the breakout, right? We had the first run to the upside. Then we got a retracement. And then we have an extension to the upside. And then we have a pullback, right? And then right now we're kind of in no man's land. We're in a consolidation period. So the shorter term price action to me is still bullish. The market structure is bullish. You have a run, you have a 50% retracement. So you can just find that by going to your fib retracement tools, right? 50% retracement. And then when we run the extension, you can see it actually exceeded the 100%, but then it pulled back to it, and that's where most of the price action has been. And then what was resistance through here turned into support. So resistance turned support through here. And now we have resistance through here, which is at $1.10, right? So $1 obviously is a big kind of emotional price level. And so until this shifts, the market structure is to the upside, right? And so the possibilities here are either another extension to the upside, or let's say that over the next few days and weeks, the volume just really dries up and there's no more buying pressure. Then one seller could step in and change that picture, right? One whale could step in and go, you know what? I'm impatient. Or like maybe he or she or they needs to liquidate their position for whatever random reason that we can't possibly predict. And then you get like some big crazy red day, right? And then the bigger picture is maybe we come back to retest the original breakout level, right? So those are kind of the two possibilities that I see. And again, for me, this is a much longer term trade. So I don't really care what happens in the short term with this. I have sized up, as you guys have seen. I've sized in on the dips and the breakout here, but I've still got quite a bit of dry powder for this position. I'm not anywhere near full size yet. And kind of the bigger picture, if we go back to the daily chart, got to zoom in here. The big area that we really need to get through is this massive resistance level through 110 to 140. And if we can break above that, really, that's where we get into like all-time high type trends, right? Because we don't really look at this red candle as like real trading activity. That was just the listing and then the dump on the listing day. But this is where most of the trading happens. So like, say we get another extension this week, and then we come up here and we test 140, and then we get a breakout into 150. The example that we've used for those of you that want to see what something like that would look like is Ethereum early 2016, right? We were trading the breakout at 150, and then a few dollars traded it up to $15, which at the time we thought was absolutely insane, right? So that's why I say, like, don't ever try to underestimate what a bull market can do. But when you're looking at future potential prices, calculate what the market cap would look like at those prices. And what was the number, Rock? At $10, I think it was maybe a $7.5 billion valuation at $10.
Yeah, I believe so.
Something like that.
Yeah, I believe it would put
After
it at
inflation?
I'd probably put it at number 4 for market cap,
Mm-hmm.
or the top 5 at least.
Yeah. Yeah. So for anybody that doesn't know, just the simple way to look at what market cap is, market capitalization, meaning the total value of all the coins in existence. You take total number of coins times the price per coin equals market cap, right? So
It'd be about like
6.5 billion. Okay. Yeah, that sounds right.
6 or something like that.
Cool. So like in this example, let's say you have, 1 million coins and they're each worth $10. What's that? $10 million market cap, right? So like in Tezos's example, there's 600 million. So let's say after inflation, it's 700 million coins. Move this up here. So 700 million coins times, if it gets up to $10, that's a $7 billion valuation, right?
Yeah.
So
Nate,
yeah.
the interesting thing too, that dynamic is that talking about supply and demand, pretty much like over 80% right now is currently baking of the supply.
Mm-hmm.
So it could, and this happens a lot in crypto, where you can have thinner order books and have a large market cap or a fast growth in market cap, but not actually have full access to all the supply, right?
Yeah.
So that happens a lot in crypto. Obviously, I'm sure there's going to be a lot of profit takers and sellers if you end up in big profit like that. But there's also a disincentivization because it takes like, I think 35 or 37 days to start a new baking cycle if you move your coins. So there's also a bit of an incentive to just kind of, keep your tranche of coins and then live off the passive income, or sell the passive returns or whatnot. For me, there's going to be obvious, if we do start a trend on that, there's going to be just obvious take profit zones where I'm going to have to sell and take profit off the table. But yeah, I'm just kind of looking at this as a bigger, longer term play for me.
Yep. Yeah, it's kind of, I guess, like a hybrid for you of like a early stage venture investment and a trade, right? I guess it's kind of like when you put both of those strategies together, that's where you kind of fit on this, I think.
Yeah. Like I've got different take profit zones. Who knows? Maybe once I hit those take profit zones, perhaps I would buy back my sold amounts and skim the profit off the top. That's one way to play that.
Yeah.
If one wants to like buy back one's position or whatever on each type of dip, typically in a traditional bull trend in crypto, like we could even see drops, 50-60% on the retracements for altcoins. With Bitcoin, it'd be more like 30-40 on the retracements, but with altcoins, because they're less liquid, you could see some fairly big dips on the way out. And even if one looks at an Ethereum chart or Ripple chart or whatever, there's been a lot of shakeouts along the way. There's been a lot of periods of consolidation. There's been a lot of chop. There's been a lot of things in between, black swans and all kinds of stuff thrown at it.
Absolutely. And that just, I think a good kind of caveat or thing to add on to that is the earlier the project or the coin, the more risk associated with it, right? Like, meaning like you said, like bigger volatility, if I can spell, higher risk of failure, right? Of something like a DAO hack happening or EPC, anything like that, or just running out of capital or whatever the thing is.
Definitely. Yeah, not all new projects, not all coins survive. So, it's important to pick wisely when accumulating.
Yeah.
So
that's the USD chart, right? So, Master was saying hit BTC as a better Tezos chart. Okay. So yeah, the other one that we want to look at is Tezos BTC, right? So obviously this pullback right there off of the high corresponds with the Bitcoin pop, right? So what is this? April 1st to the low there, April 8th. So the 1st through the 8th. So yeah, so there's the 1st and then there's the 8th. So you can see when Bitcoin goes up, when Bitcoin has a big breakouts, usually unless they're directly correlated, most of the time you'll see the pairing of alt BTC go down, right? So where the USD value didn't necessarily go down here, the value of XTZ compared to Bitcoin did go down, right? So this chart kind of looks similar though, where you've got the run retracement. This is just a much deeper retracement, but you've got a lot of support through here. So this is definitely a very important inflection zone. You can see we're right in between that sweet spot. And that's where a lot of trading activity is happening here. So I've been paying kind of close attention, but not overthinking this zone. We could chop around. If we start to ramp up and say we see an increase in volume, see through here how this was high volume and then we've got low volume. Let's say we get a big green day and then it's like a big green candle like this. Maybe it even exceeds the prior green. That's what I would want to see for continuation of the trend. But if it's just this small choppy price action, then I don't really expect much to happen.
Absolutely. And for anyone who's not just long-term invested, but for anyone in the group who's happens to be trading Tezos and perhaps looking for higher targets or whatnot, one very simple trade setup tends to be around exchange listings and probabilities around exchange listings. Oftentimes an exchange listing can lead to a pump, and then there's often a sell-off on the news, sell on the news type of thing. We see it a lot on Binance. We've seen a little bit in Coinbase, but they've been getting weaker and weaker, and they typically tend to be selling the news. But I would say that, in my opinion, we don't know exactly when, but I believe there's a high probability that will be listed on those two exchanges. The reason why I say that is because both those exchanges opened up staking Tezos as a service in their wallets. Binance with their Trust wallet and Coinbase with their institutional investing platform that they have, their custodial service. Mm-hmm. So to me, it would be bad business for them not to start trading it, because people need to buy these to start staking them. So why have them go to your competitors and not offer them a means of buying it on your own platform, right? So that's kind of the way I see it. No guarantees, and that'll probably be just a quick spike up, and then maybe you'll break new highs, and then there'll probably be some profit taking and a sell off. So that's usually what happens, like for example, I bought Holochain before the Binance listing, and popped off. Actually, it popped up, it sold off, and then it went up higher and then consolidated, and so on and so forth. On the BTC chart, on the USD chart, it kind of looks like a large consolidation pattern. On the BTC chart,
Yeah.
it's kind of showing throwbacks to like prior resistance turning support. And if Bitcoin consolidates and alts make another push, then obviously we could see new highs USD wise, which would a bounce on the BTC chart on that would probably correlate to testing resistance on that USD chart you had, which would probably create like a larger type ascending triangle.
Yeah, the challenge with HOT is just the lack of volume, right? I mean, this has been kind of the narrative with a lot of alts is like you'll get, like we've seen this over the past year, and this is pretty common in bear markets, is you'll get pops, but then they'll just V-top, and then like the volume will fade out.
Yeah.
And then like obviously this could be a run retracement to retest prior resistance, so there could be another pop coming off of this. But we've just seen so many times recently where you'll get the first pop and then it just kind of fades and it doesn't catch any follow through, right? Like to me, follow through is those second, third, fourth, fifth breakouts with extensions, which is what makes bull markets so beautiful and so easy to trade. Is once you have clear direction and momentum, it's like you just trade along with the strength. But in bear markets where things are a little more choppy, you want to be more selective and trade smaller position sizes and just be more aware of the fact that like, hey, not everything just moons.
Yeah, exactly. Like I would say that line in the center right there has to hold up. Otherwise, it'll likely just go into full retrace mode.
Yeah.
Right. And you'll see that a lot in altcoins where they just do full retraces. And that in and of itself can also be a strategy too. And there's a lot of traders who do that strategies. They just kind of start a starter position on a full retrace. And then, sometimes if that could roll over and then maybe support breaks, that's the downside risk.
And that's why I bought like BAT through here, is it was like at accumulation levels and looked like it was ramping up.
Yeah.
But like at the same time, we know like, dude, this is an ugly chart with a bunch of lower highs. So until that changes, I'm not going to size into that. And if you look at like the BTC chart, it's even uglier where, Binance, it's more of just a choppy consult. It's more of like a Dogecoin type chart. This actually did have a breakout. It's just the question now is like, okay, is this going to turn into support or is it just going to flop back inside?
Yeah, absolutely. Lots of sharp V-tops on that.
Yep. So that is the gist of what I've been focused on the past, I'd say, week or two. Is for me the Bitcoin breakout. I know we've got some other charts that are looking fairly interesting. So we've talked about Ethereum, kind of a plan on that. Litecoin had some nice action. So we talked about the 1, 2, 3, 4 back here, and then last week went parabolic with Bitcoin. So now you can see heavier volume selling coming in around that $100 emotional price level. But overall, this is a really nice example of the 5 phases completing the market cycle, right? Accumulation, early trend, parabolic, fast crash, volatility, shift in momentum, right? So overall, just nice to see a lot of these coins starting to show some signs of life, like Rocky says, like the spring, right? And this is actually, I really like this chart. I feel like we just need to disregard the volume piece of it. But the price action is really interesting because this is all of altcoins excluding Bitcoin. And you can actually start to see some signs of life here. Now, is this going to turn out to be just a lower high? And then are we going to come down to test the support zone from summer of 17? I think there's a high probability of that. But there's also a big potential inverse head and shoulders here too, that if this turns out to be the right shoulder over the summer, that could be the signs of another alt season on the horizon. So I'm kind of excited about that potential.
Yeah, absolutely. And then it could it can literally take months or even years to do that. So, you know, in the last cycle, we've had periods, you know, run-ups that would last 6 months, and then multi-month retracements, and then, you know, other run-ups, and so on and so forth. So one definitely needs to have a lot of patience, but there's certainly a lot of volatility too for people who want to do shorter term trading and stuff. There's definitely a lot of volatility in crypto. It's just we've been in a much tighter consolidation period where you're not getting like the typical extremes that we've seen in the past. And I find I like those consolidation periods in where we're at in the trend and the cycle, because oftentimes what that means is that the bull trend, if we do go into a bull cycle, it means it's healthy, right? It means that there's a lot of period for growth. Whereas like if it just started to shoot straight up and go parabolic without long periods of consolidation, then suddenly we end up back at square one with you know, facing similar problems at the end of 2017, right? Having to hedge back into cash and this and that, right? As a crypto enthusiast, I certainly don't mind these low, quiet periods, because it just means that I can comfortably hold coins and positions, and versus, you know, the madness of the parabola.
Yeah. It's, you know, you have to learn to appreciate all of the market cycles, right? Because if not, you're going to get frustrated and quit right when you really need to be focused and paying attention. And for me, the best thing about bear markets is there's less noise and there's less bullshit from people that are just tourists looking to get rich quick, right? So, you know, I know all you guys that are here during the time periods when the media is negative on it, the mass public perception is negative, right? It feels very, very similar to 2013, 2015, right? Which in hindsight, those turned out to be the best times to prepare for the big market cycles. But most people are sheep and they just do the opposite of what's profitable. And that's why we're here to help our community, you know, get on the right side of that equation. So that'd be interesting if we could get, like, you know, if it looks like the left shoulder as far as timing goes, you know, maybe early to midsummer have some kind of shift in bigger market sentiment and bigger market action with altcoins. But again, I think that, you know, this was an anomaly, the ICO boom. I think it's going to look differently next time, but you never want to underestimate what's possible.
Yeah, absolutely. Definitely agree.
Cool. So, Rock, you want to jump into news and developments, progress developments?
Sure. So the biggest news piece.
Here, you want me to pass over screen sharing?
Sure. Sounds good.
Cool.
All right. All right. Can everyone see my screen?
Yep.
All right. So the biggest news piece that was this week. You know, there's like a lot of drama on crypto right now. I mean, Craig Wright's trying to sue a bunch of people on Twitter and stuff. That's just like typical crypto drama. So I don't really pay a ton of attention to that, except, you know.
Why would Satoshi do such a thing?
Yeah, and he's like threatening. He's putting bounties out to dox people and stuff. So
Jesus,
sounds like something Satoshi would do. Anyways, CME futures. This was something that was noteworthy. You know, they've been seeing a steady increase in volume, right?
Rock, can you throw that link in crypto news alerts?
Yeah, just do that right now. So I think that's fairly significant. It's showing it's showing market interest probably from the mainstream. Let's just market resources. I'm going to put that. put that in crypto news alerts.
Yep. Yeah.
Alright.
So if you guys want these links, just look in the channel Crypto News Alerts.
That's a nice little graph. So we hit some record breaking. We broke some records there. Let me just Google Trends. Let's see what Google Trends is doing.
Yeah, that's always an interesting kind of early indicator.
Yeah, last week we showed that it kind of broke out of a lower range as far as searches are concerned. See if there's any fall through. It seems to be kind of tracking the overall market. You know, now the Google search trends are having a bit of a dip. It's going to have a throwback to retest resistance. So, but this,
yeah, I mean, we don't trade price charts. We just trade search term volume charts.
exactly. It's all just supply and demand. I mean, there's just such a strong, oops, I don't know what happened there. Such a strong correlation with people searching on Bitcoin and buying Bitcoin, you know? And what's cool about this is that it's,
oh yeah. Hey, Rock, look at the world, not just the US.
Oh, this is just the US, my bad.
Yeah. Thanks, Jacob. Good catch.
Yeah, good catch. We're dealing with supply and demand on a commodity, but it's a commodity that's a lot more readily available to people. I mean, obviously they still have to jump through hoops to learn how to do this, but it's, you know, on a global scale, it's very accessible, including to people in countries who might not have access to, let's say, American exchanges like New York Stock Exchange or, you know, CME futures or stuff like that, right? So there's a lot more variety, but it's technology. We're adopting new technology and new possible paradigms in how we interact with society. So it's almost like, can kind of maybe look at it similar to internet adoption, except that the commodity of internets would be websites and web addresses, URLs. You know, I think in the .com boom, there's a lot of domain squatters, a lot of people buying and flipping domain names and stuff like that. So that would be kind of a commodity on the internet that you can make money off of. So Bitcoin's a network, and it has a coin commodity to secure that network. So you see a little bit of an uptick here, and you know, there's some resistance there. So if we start to get into a situation where you see this, where it's just producing higher lows and so on and so forth, then it's just showing a lot of user interest. And as new users learn about the technology and stuff, naturally they might want to purchase some. So,
Brock, what are the hot countries say like over the past 12 months? If we look at like the 12-month thing,
let's see.
and interest by region, kind of curious what's
Nigeria, Africa,
South Africa, yeah,
and Ghana. So
interesting.
So, and this is interesting because, you know, there's obviously like there's a growth, lots of possible tech growth, right? And places that aren't necessarily as developed with the technology. You know, you see it with the cell phone boom and so on and so forth. And in some places, Bitcoin is actually more useful, right? So we talked about Bitcoin possibly even serving. I think the stat was there's like over 3 billion people in the world who don't even have access to a bank account, right? And, in places like that, there was other types of currencies that were very popular. One was called M-Peso or something like that, which was kind of like phone
M-Pesa?
credit.
Yeah.
Pesa, which is like phone credit currencies. It was like phone credits, and people are using it as a currency, like transferring it to each other and stuff. And so that was very popular. And so it doesn't surprise me seeing, you know, a peer-to-peer digital currency being very popular. It wouldn't surprise me if, you know, if people start using it on their phones and places like that just to transfer money to money. Obviously,
yeah, so Africa's actually kind of leapfrogged credit cards. You know, they went from like cash which is obviously just a terrible form of money. Like I think in our lifetimes, we're going to look back and go, man, paper notes, what a stupid form of money, right? They leapfrogged credit cards though, because like a lot of Africans don't have access to like normal bank accounts, but the way that M-Pesa works and like obviously Bitcoin and crypto, like everybody now has they make $5 and $10 cell phones. So like they don't need bank accounts. They don't need credit cards. They can just transfer these credits peer to peer. And I feel like that's why it's catching on so much.
Yeah, absolutely. And I kind of see it as going in waves, and there's always new user adoption happening in every country. Pretty much there's growth happening in every country, but it seems like crypto or Bitcoin technology is hitting different areas in waves. So we'll probably see a lot more interest in countries that didn't necessarily get hit with the same kind of adoption waves in the previous cycles.
Mm-hmm.
Right? So we'll probably see it like go into some other areas. I know Nigeria has a fairly big internet infrastructure and growing tech and stuff in Nigeria. So it doesn't surprise me to see Bitcoin.
Yeah, there's 10 fake Chris Dunns in Nigeria right now setting up social media profiles trying to scam. Talk about whack-a-mole, man. Like every day. Now the new one is I'm getting emails. People are setting up freelance ads. Like apparently I'm looking for a personal assistant and I'm hiring people, and I don't know what the scam is. I think they are telling people maybe to send them money to get hired. I don't know.
Chris, but what about your uncle who's a prince who passed away? I mean, I sent you like $100K just so you can unlock that money so that it's
coming soon, man. The internet's slow over there, so.
All right. I was like, wow, Chris has an uncle. Chris is a prince.
Yeah.
All right. So anyways, enough.
Yeah. If you guys are curious, if you want to see some of the ridiculousness of some of these scammers, like just look at that blog post and you can see, like, I try to screenshot any messages that come across from these scammers. It's crazy.
All right. So other than that, let's see. Other than that, anything else stand out? Not really. That was any news. It's mostly just been kind of drama this week. Just people fighting on Twitter and stuff. Like nothing that I would say is like super newsworthy.
Yep. And oh yeah, and by the way, Devin, yeah, no hate on Nigeria. We have a lot of great people that we know from there. Unfortunately, we've just pinpointed a lot, like in doing our research, I know a lot of the scammers that are trying to actually steal money from people that follow us are from there. So yeah, forgive me if I'm a little salty, but I know most people there are good.
Yeah, I had posted an article actually from 2016. We had a student from Nigeria who actually said he was using Bitcoin, as a means of survival. And same with Venezuela as well. That was big boom in Venezuela. We've seen with the mining too. They've been mining it like mad. A lot of people have been getting into that there. So yeah, we're just seeing user growth everywhere. And we're not near market saturation, so we're probably just going to keep seeing an uptick in that, and the price will likely reflect on that.
Yep, good stuff. Okay, what questions do you guys have? Let's do some Q&A. And yeah, if you guys had a question that you posted that you want to see again, either throw it in the Q&A or you can post it again in chat. GIMP, by short, do you mean selling on margin? Yep, that's what shorting is. Wind moon, sir, tomorrow. Actually, wind black hole, I think, is the new term. You guys all see the black hole?
Yeah, I saw that. Thoughts on Facebook stablecoin, JPM coin? I don't know. I mean,
Intranet versus internet.
Yeah, exactly. I don't get terribly excited. The only thing that would kind of pique my curiosity is that if Facebook coin were suddenly trading on other crypto exchanges and you could trade it back and forth for Bitcoin and other things, then I think that would be kind of interesting because there are, I think, over 1 billion people on Facebook. So that's definitely, if they all start getting cryptocurrency for participation somehow, and it's actually real crypto that's linked to an actual blockchain or interfacing with other blockchains or other forms of crypto in the greater ecosystem, I think that would be very interesting for on-ramping new users. But if it's kind of just closed garden environment where it's just their own little private coin and their own private universe, that doesn't really excite me very much. So it all depends on how much interaction it has with the greater crypto ecosystem. But if it does have interaction with the greater crypto ecosystem and it becomes a success, then suddenly you might start to see a whole bunch of like Fortune 500 companies shilling their own shit coins.
Yeah.
You're gonna have like Tidecoin, and like it could get pretty stupid pretty quickly. But the interesting thing with that was all the free advertising we get, right? Because they've got big marketing budgets and stuff. So we'll see. It really depends. But at the present moment, I'm not terribly excited about it. I'm not a big Facebook fan either. I'm not even on Facebook. So
sorry, Zuck. I know you're in class today. Trying to learn this stuff.
Yeah. Zuck's gonna market dump all his Bitcoin now.
Fine, I rage quit.
It's just to punish us. I'll capitulate the Zuck candle.
Yeah. So, what's the best margin trading exchanges? Well, it depends on where you live. Rock, I'll let you lead off.
Yeah, so if you're in the States or the UK or something like that, then Kraken's certainly a good option. They've got 5x leverage for Bitcoin and a little bit less leverage for the other markets. So that's a good option for anyone who's in the US and doesn't have access to other options. Bitfinex still offers margin 3x. And one really popular option for the true degenerates is BitMEX. They're not open to the US, but very popular site for crypto degenerates to leverage up. And people generally play the smaller time frames on that, like even like smaller intraday movements. Obviously, with that much leverage comes much greater risk. If one has a strategy that works and manages risk, then obviously leverage can make a lot of profit on very small movements, right? So that's why there's a lot of volume on places like BitMEX.
Which is fun to trade when there's really high levels of volatility. But if you try to day trade or overtrade when there's not, you're just going to get chopped to pieces.
Yeah.
Would you be willing to talk more about how you calculate risk to reward? Why, yes, absolutely, Eric. So we talk a lot about risk to reward and basically trade setups and entries and just the structure of different trade scenarios in the boot camp. I mean, we go into a lot of detail with that. But the gist of it is, like, the 30,000 foot overview is where's your entry, right? Like, where's the ideal entry? And then the risk is based on where should the market not go, right? Not, where would I be risking 2% on this trade or some arbitrary number. It's based on the technical analysis. Where should the market not exceed a certain level of price? And then your stop, either mental or a hard order, goes behind that level, right? Reward is predefined by looking at Fibonacci tools, Fibonacci extensions to be more precise, and prior market structure areas, right? Measured moves, support turned resistance, that kind of stuff. And then that's it. You frame it, you find your risk, you find your reward, and then you back it out. You back out your position size by doing some simple math of like, what's the maximum I want to lose on this? What's the ideal reward? And then that, based on that, is what your position size is.
So we have one question asking when the next boot camp is planned for. So we're working on that. In the process of just tweaking a few lessons, adding a few new lessons to the boot camp, and revamping it a little bit right now. And pretty much as soon as that's done, which will be a lot sooner than later, we'll let folks know and open it up again.
Yeah. So, and for anybody that doesn't know, if you're newer, the boot camp is an 8-week thing where it's about an hour to an hour and a half of work every day for 8 weeks. So it's pretty intense. And I mean, it's just literally everything that you need to know from the different trade setups and Rocky, I think we launched it originally in 2017, and it took us like 9 months to create the first version. And we've been updating everything, obviously, because the crypto market changes so much so quickly. So there's a lot to add since 2 years ago.
Yeah, I think we had our first, we had our first combined version or whatever in 2016, but there's been multiple versions since that. And the actual boot camp format is a new format that we come up with a few years ago, which kind of trickle feeds lessons every day, as well as a live class once a week to go with those daily lessons.
Yeah.
That lasts about 2 months.
Yep. Yeah, and then I saw a question, will the new updated lessons be accessible to those who had the old version? Yes, absolutely. Yeah, you guys will get that. All right, let's see. How do you see alts responding to sideways chop between 5 and 6K? Kind of the same. I mean, I think that until Bitcoin breaks out, I don't think it's going to be like an all tides rising type scenario. I think we're going to see individual coins kind of detach from Bitcoin's movement. We've seen that in more recent history, but say we chop in between a zone for a couple of weeks, I think most coins will follow suit. Any thoughts on the Coinbase credit card? Yeah, Coinbase, was it this week they announced with, what is it, Visa, I believe? Partnering with Visa. That's
some more news that hit this week. They're partnering with Visa, or they're just creating their own?
Here, let me pull it up. All right. Because I had the old
Here, you want me to pass
debit
the screen
card
to you? One sec.
There you go. No, it's fine. There's the link.
All right, let me just pull up the link for.
Cool. Here, I'll post it in the news alerts as well.
All right, let's look at this.
When was this? This was yesterday.
These are making Bitcoin, Ethereum, Ripple's, XRP, and Litecoin payments a reality. Coinbase has teamed up. So they've actually teamed up with them. Okay, that's very interesting. That is very, very interesting. So if what they're saying is accurate, there's other crypto cards out there, crypto Visa cards out there. But the difference is that they haven't necessarily teamed up with Visa. Like, any company can issue out their own branded Visa cards type of thing, right?
So like most of them have been debit cards.
That's right.
I don't know if this is going to be credit based. I saw the headline yesterday, but I haven't looked into it yet. So next week, I'll do more due diligence on this and give you guys my opinion. And if you guys have any opinion, feel free to throw it in chat there.
What would be a great system for on-ramping people is use crypto as points, right? Instead of just using internal Visa points or whatever to buy things, reward people in some Bitcoin or Ethereum or something.
Yeah.
That'd be pretty cool.
Yep.
So there's someone saying it's a debit card. Yeah, that doesn't surprise me. The risk of linking actual debt to crypto is pretty significant.
Yep.
So
Absolutely. Okay, next question. Let's do like a fire round, and we'll just knock out a bunch of questions really quickly. So, Tobias, any thoughts on Casper Labs? The new Vlad Ethereum fork is coming out in 2019. They're in a Series A raise right now. I don't know about you guys, but I still have fork fatigue. I've just been kind of ignoring most of the recent forks. Rock, have you looked into that or have any opinion on that?
Which fork is this? Sorry.
Casper Labs, the new Vlad Ethereum fork coming out this year. I haven't looked into it yet.
Oh, okay. No, I think that's basically Ethereum's going to have a hard fork, moving towards proof of stake. But I know there's been some drama right now in Ethereum. I haven't been paying attention to it.
Me neither.
I think there's some drama between the miners and the developers, and I kind of saw this coming years ago. Basically, obviously, the miners don't want Ethereum to move into proof of stake, and it's in the roadmap, and the developers want that. So I think there might be a butting of heads there, which I think, the miners should just go jump on Ethereum Classic if they don't like it, right?
Yeah.
Because that'll always stay proof of work.
I don't know. I'm going to add that to my list of things to look at, but I've just every day there's either a rumor or some kind of news or some kind of fighting in either Ethereum or Bcash or, I don't know. I just, my attitude for the past year with forks has been, okay, let me wait till something comes out. I'm going to ignore 99.99% of the drama around it. Wait until it comes out, see how it works, if it works, what the deal is. And even then, I'm probably going to ignore most of the fighting and just let the chart be the guide.
Yeah, absolutely. And you'll notice that with a lot of the Bitcoin forks we had, a lot of them got not the Bitcoin forks in and of itself, the airdrops. That's I should specify.
Yeah,
the airdrops.
Yeah.
So just for folks who don't know, there's a difference between a hard fork or soft fork in a protocol and an airdrop. And those lines have been kind of muddied because there's been some marketing from Bitcoin Cash and SV where they're trying to claim to be Bitcoin, but they're just airdrops. So they're not necessary. They share that what an airdrop does is it shares all the same ledger and history from one point in time. And then they reward coin users, coin holders with their new coin from a new blockchain or whatever. So, anyone who had Bitcoin ended up with Bitcoin Cash, Bcash, and then same thing with the Bcash Satoshi Vision split that happened.
Yeah.
But every one of those airdrops got weaker and weaker. So after Bcash, there's Bitcoin Gold, then there was Bitcoin Diamond and Bitcoin Shitcoin and whatever, and their market value, market cap, liquidity just kept on diminishing. So because Bitcoin Cash was kind of a big deal at the time, a lot of people made a lot of money off that airdrop. Suddenly everyone jumped on the airdrop bandwagon and started creating their own shitcoin airdrops or whatnot. So, but the market's kind of got really diluted. A lot of the excitement and market hype around that has weared off in general. So right now, like I almost kind of, unless it's got some serious liquidity or some kind of hype factor to it, most of them are just dust to me. There's probably like a dozen forks that I could claim off of my Bitcoin, and I'm probably never going to do it.
Time, man. Time is the most valuable asset, and forks are the biggest time waster. At least, to date. Like there could be a fork that comes out and actually does something important, but I'm not putting a whole lot of time into the due diligence side of that. I'm just looking at newer stuff.
Absolutely.
Thoughts on China banning crypto mining? Will it affect the crypto ecosystem?
China bans crypto every year.
Yeah. So here's my caveat is I know nothing about China other than what I watch from a few YouTubers. So there's a couple of guys that I've talked about. I'll type their info in here. Lao LAOY 86 and then Serpent ZA and then ADV China. These are 3 YouTube channels that I pay attention to where I just get a sense of like how the Chinese government works. I'll just tell you, like, over the past several years, China has banned or threatened to ban crypto stuff over and over. And it used to actually be very important because China was a major, like back in 2014, China was a very large percentage of the crypto trading activity. And so whenever China would come out and say something crazy or like something scary, Bitcoin would dump and like markets would react. Nowadays, not so much because it's a much more diversified ecosystem. Now, obviously, if all the miners in China quit, that would have some effect. But I really, at this point, at this stage in the game, I don't really care what any single individual government does, either pro or against crypto, because it's its own beast now. It's you know, like the cliche saying now, the virus is spreading. Like it has spread and it's out of the hands of any single government. So I really don't care what China does, to be honest with you.
Yeah, they used to have a lot more impact on the price when Chinese exchanges led to a lot of price discovery.
Yeah.
But they gave the boot to a lot of Chinese exchanges, so they relocated different parts of the world, and they don't have the same impact on the Bitcoin markets that they used to. We used to always watch the BTC CNY price, and now it's kind of like a non-event. They're not really dominating the market. They're still dominating the mining market, but a lot of the big Chinese miners have relocated. I know we had a lot of them that even came to Canada and such. So,
oh yeah, and even like there was a flight to Japan and South Korea. A lot of innovation left. They were like, all right, well, you know, we're not going to put up with the Chinese government's bullshit. We're going to go somewhere that's more friendly. And I think that's what's going to happen, you know, and this is the conversation I had with Tim Draper last year or the year before that, was, you know, how governments are going to have to start competing for talent now. Like this is a global economy, and governments that are, aggressive or anti-innovation, they're just going to lose. They're just stealing the prosperity from their citizens. It's not like people are going to take it, and the smart, innovative people or the people with wealth, they're not going to put up with repressive governments. I'm like, screw you. I'm going to take my brain and my capital elsewhere. Thank you. Bye-bye. So that's why I just really don't care what any single government does, to a certain degree, obviously, right?
Yeah, for sure.
So isn't Bitfinex leaving the U.S.? Oh, they've been gone. They've been gone for a couple of years. At least not allowing U.S. citizens. Kraken. Yeah, I see some talk about New York. Yeah, you know, the one thing I'll say about the BitLicense and all the stuff going down in New York is it is a damn shame. And that's one thing that we talk about. You know, what I was just saying about repressive governments, that the BitLicense fiasco, if you haven't looked into this, it's actually pretty interesting. You should research it. Is the worst or the clearest example, I should say, of crony capitalism at work. Without getting too political, just to give you like the brief history, there was a guy, I can't even remember his name. He was a state regulator in New York, basically came up with very, very restrictive anti-business laws around crypto for the state of New York. And then once he put those laws in place, quit, went into the private sector and started consulting with people and taking money, showing companies how to get around the regulations that he put in place, aka crony capitalism.
Yeah, absolutely.
It is ridiculous. So I'm sorry for you guys that live in New York. I know some people are suffering. That's why there's a big flight. I mean, I talk to people at least a couple times a month that are like, you know, leaving high tax zones, leaving over-regulated zones. And I hope there isn't a cascade effect of that crap that spreads to other areas, which is why I like business friendly jurisdictions.
They're all flooding to Austin right now, huh?
Yeah, it's probably why the real estate prices in Austin are skyrocketing too. Huh?
Yeah.
Two tax-free zones, or not tax-free, no state income tax. Was it Florida and Texas?
I think what is there 5 or 6 states? I've only lived in states that have not had state income tax. Florida and Texas. Chris, I believe you reside in the U.S. What crypto-friendly bank or banks do you use in the U.S. for an LLC account? I'll be investing 7 figures for a 2-year. Oh, okay. All right. Go ahead and private message me, and I'll tell you. I don't want to put your finances out there in the class, but just send me a private message in Discord. But as far as what I'll say is I'm not aware, and you guys correct me if you know of anything else. I'm not aware of any banks that are outright like banning anybody that's doing anything in the crypto space. Like I have bank accounts with several banks here in the US, and both personal and corporate. And I so far, knock on wood, have not had any issues with any banks. Okay. Let's go ahead and get through the rest of these questions, and then we will wrap it up.
Well, one last news thing. So Quadriga is going into bankruptcy, which will speed up the proceedings and such. And they're just trying to find and consolidate funds from the payment processors. They haven't found any of that huge pile of crypto, so there will be some kind of refund, but they're going into bankruptcy. So that's the latest.
Which could take some time, huh?
Yeah. I just wrote it off as a loss in my mind, and one day I might get a bonus check in the mail. So.
Yeah. Let me see what last questions we got, and then we'll wrap it up. Yanni says, Chris, in the bootcamp, you talk about signs of a reversal. If you look at the attached chart, it shows the price action breakout, and I'll post the chart you posted. Shows the price action breakout of resistance. The descending line also shows some confluence with horizontal support. What confirmation sign would I be missing to conclude the chart shows a reversal? Great question. And here's what I'm going to say is kind of a broad answer is watch last week's class where we go into depth of the 3 possible outcomes of this breakout. I like the way you pose that question because it tells me you understand what you're looking at. And just to recap what those 3 outcomes are, I won't go into as much depth as we did last week. But basically, it's either option number 1 is a V-top, where this is a lower high that leads to another washout like we saw from those prior highs last year. Option 2 is a retest of 6K and a higher low for another 1, 2, 3, 4 breakout pattern that leads to a bigger bull run, right? So I think that's the case that you're probably leaning into. Or the third option is another washout to retest the lows in the 3K range to kind of give us confirmation of a longer accumulation pattern, right? So one's a V-top for more lows. One is accumulation like 2015. And then one is an aggressive reversal with another 1, 2, 3, 4 breakout above 6K that would look similar to the first bubble of 2013. So April, May 2013. So those are kind of the 3 possibilities that I see. But I agree with your assessment that the current price action shows a breakout of resistance, the descending line, and confluence with horizontal support. The one thing that we don't know, the caveat to that, is we don't have confirmation of a broader trend reversal. So Rocky's marking all this up, showing you what I'm talking about. So like confirmation in 2015 was in November there, where price ran from 250 to 500. That was the higher high right there. So imagine if that was 6K, if that was breaking above 6K in today's market, and then we hold a higher low, that would be confirmation that the trend has shifted. So what we're seeing now is early signs of a reversal, but that early signs don't have to hold. They can actually be pop and flops, which lead to new lows, right? So we want to think of both sides of the market. So the bear case is the V-top pop and flop. That sounds kind of funny. V-top pop and
This
flop.
would be the bear case right there.
Yep. So the first one, the first sign that Rocky's marking up is the V-top pop and flop, because there was an early sign there that could have been the bottom, and we were accumulating some around that. Or step number 2 is longer accumulation, like we saw like midway through 2015. And the final is if we get a break above 6K with a higher low. Okay. Does that make sense, guys? Everybody kind of clear on those 3 potentials? And again, I know we kind of glossed over it today, but we went into a lot of depth last week talking about it. And then, yeah, that first kind of reversal in 2013, yeah, that would be more of an aggressive, like faster breakout, right? Yeah, it came down like 70, 80%, had a V bottom, and then another breakout.
Yeah. So like even if we did flop and chop around sideways, so let's say we, because we just kind of, let's say this were 2015, if we're going to follow that as a template.
Yeah.
One thing that happened in 2015 is it showed, an early break of the descending line, but then it did a retrace, kind of retest the levels, retested up, and then another capitulation, and then it broke out. So literally kind of established a range there. And if you look at, let's say the bottom there up to here, that was like, a good 88% range. Let's just play with the notion out. Let's just say we do hit 6K. Then, hitting that area, 6K would be a similar percentage range from the bottom to the high. And then if we did hit a lot of resistance there, then it's possible that what the market's doing is just establishing a much, a wider accumulation range. If it does sideways and then maybe you have a big sell-off and it comes and retests some lower levels, gets everyone all shaken up to the core and then has a little bounce or whatever, then it would be following something similar to 2050. Now that might be a little bit too cookie cutter template. It might not happen exactly like that. Could be any combination or hybrid element, or obviously worst case scenario is it just ends up like that and then pops a new low and then you get the sideways range. So, but right now kind of, to get, when you look at actual follow through on a bull trend, when you're absolutely in a bull trend, I mean, look at from this point onwards, even though we had these massive shakeouts, big moves, I mean, just this shakeout, is kind of apocalyptic, for big at the time.
Yeah, and that was, by the way, that spike was brought on by a Ponzi scheme in Africa called MMM.
Yeah, it was very popular in Litecoin. We saw MMM, and I think it was Litecoin too, had its own little bull trend. So yeah, it was very popular in Asia and parts of Africa. Again, supply and demand. But you'll notice that every single point after this point was a higher low and higher high. Like it just, throughout the entire trend from that point forward, everything was higher lows and higher highs and big shakeouts. And it was always doom on every single shakeout, right? And everyone would question as to whether or not we're going into the bear trend, higher high and higher lows. What was funny, what was interesting, it was kind of like people were questioning and doubting and skeptical the entire bull trend. And then when it went parabolic, suddenly like people weren't questioning anymore. Some of them were, obviously. Some people didn't know that we're going into bear trend, but it seemed like a lot of people just threw everything out the window and got caught up in and quite the fervor, right?
Yep.
Which
Like
could
this
just be
time is different.
yeah, institutional money S curve. We're going to 100K. It's like, all right. Anyways, so this is, if we do continue on the market cycles, this is just a really big dip on a larger trend as these were. So that's what I'm leaning towards. I'm a long-term bull, so that's where my leanings are. Obviously, there's no guarantees in that, but you know, so far it's paid out nicely in crypto. So
Yeah.
we'll see how that plays out. I think we've hit hour and 40 minutes, so we're kind of
Bo asked, are you guys gonna have another class in Austin? So I'm not sure, hopefully all you guys got this, but this year we're actually planning either, and I sent this survey out, here's the link to the survey with the video kind of explaining what we're doing. I don't think we're going to do one in Austin this year. We've done quite a few here in like the US time zone. So last year we had just a blast in the Cayman Islands. I mean, that was so much fun, and the feedback from you guys from that was like awesome. So we've decided, and I know we've got a lot of requests for either Europe or Asia. And so in that survey, we're kind of kicking up two ideas, either between Amsterdam or Bali, and either in June or July. So if you can fill out that survey, if you're interested in doing an event with us, that would be really helpful. I'm going to kind of take the results tomorrow and then meet with the team and then figure out what we're doing. And then next week we'll lock down some details, some places, and let you guys know. So yeah.
Yeah, looking forward to it.
Yep. Okay. Well, Rock, you want to go ahead and wrap it up?
Yeah, sounds good. I'll end the recording. So thanks, folks, for coming. Hope you all enjoy your weekend, and we shall see you next week.
Yep.
Cheers.
Thanks, guys.